So welcome everyone for another Disrupt digital event, as we call them. Now we're trying out the afternoon time. I hope this works for you as well. Today we're going to be discussing how the gap between the real world assets and decentralized finance, short DeFi, can be bridged. And we have an interesting panel headed by moderator Philipp Sandner. As usually, we're going to have a WhatsApp group. So here's the QR code for you to scan. Otherwise, you have also received an email just before the event with a Zoom link in it. There's also the WhatsApp link in there. So if you can't scan this for whatever reason with your normal phone or QR code scanner app, then you can just click on the link and it will open the WhatsApp group. If you have any questions to any of the speakers, just write them in there during the event. And then afterwards, we will go through some of the questions and have them answered publicly. For the questions that are not answered, the speakers will also be joining the WhatsApp group. So we hope to carry the conversation on after the event. Yeah, that's it from my side, actually. I'll hand over to Philipp now, and I hope you enjoyed the event.
Thank you very much. I think it's very nice to now explore the afternoon time. Actually, this week, the ConsenSys conference in New York should have happened, and some of us would have met in New York this week. It's not the case, unfortunately. Therefore, we are trying to replicate this by staying at home and at least connecting virtually. I'm happy to moderate this panel about DeFi, decentralized finance, and also bridging the real world assets from the real world into the DeFi ecosystem. And I'm happy to have really some amazing speakers here from Centrifuge, that's a newly upcoming uprising project. Then we have Ernst & Young, that's a legacy consulting company, but of course pretty well established in the area of blockchain and crypto. We have ConsenSys here in the call, and of course also Maker Foundation, that's I think very well known, the landmark project on top of Ethereum, besides a couple of others. And I think the best is if everybody of you would present themselves very quickly. I would propose that Gustav from Maker Foundation is quickly presenting himself and also his views about DeFi at this point of time.
Yeah, thank you very much for the intro, Philip. Always a pleasure to join these events with you guys. Yeah, so basically my name is Gustav. I'm responsible for the European business development of Maker. Prior to joining Maker, I was living and working in Argentina as a consultant within financial technology. So kind of like the standpoint where I come from and what I personally am passionate about is how we can, get these systems to a point where the scale is big enough for us actually to be able to serve a lot of the people in the world who really, really needs it. The ones who really cannot rely on their local financial infrastructure, for example, such as Argentina, where I was living, having experienced a 60% inflation on your own salary in a local currency in a 10-month period, that doesn't feel very good. And we definitely believe that there should be an alternative for people like that, right? We're sitting at a stage now in the world where you should not necessarily rely on what is around you for like a good life. In regards to like where DeFi is now, I think we're in an incredibly exciting time. At Maker, we have recently opened up for what's called the Maker Improvement Proposals, where we really have created a framework for adopting new collateral types in the system and being able to provide these collateralized loans and liquidity against a variety of assets, and instead of just Ethereum and BAT as we had before. So yeah, I think this is the perfect time to discuss these things, and we have several people on the call as well. I can see that in the process of these applications. So really, really exciting times indeed.
Perfect. Thanks. Magnus, would you like to be next?
Yes, thank you, Philip. My name is Magnus Jones. I'm the Nordic blockchain lead at EY. And at EY, as you mentioned, we have a great focus on the blockchain area. We have more than 300 core blockchain developers spread out towards 14 different core blockchain hubs that we have, everything from New York to San Fran to Europe to Asia, all over. So we do development within this area, but we also work with this within the tax, legal, regulated, unregulated area. So we work with everything from startups to public listed companies to assisting authorities, banks, central banks, etc. And of course, we have quite a few clients all over the world where we are involved in token economy projects. And hence, there's the links towards the DeFi element as well. And as we presumably are going to talk a bit about further now, is also sort of the challenges around this. And that's sort of an element where DeFi is by nature easy to use if you know it, but if you don't know it, it's complex. And it's also complex for regulators to understand this. So that's also an important part of this that we work heavily on to create education around this and to make all relevant stakeholders understand this. But as mentioned, we have lots of future thinking clients that we have already assisted on this area. So we have gained quite a good experience, but still there's uncertainty towards this. So it's a very interesting area, and we see that this is not just something that it's future thinking companies sort of out of, you can call it a creative startup or something, but it's established companies that will affect our traditional business from an audit point of view, etc., that we need to understand how this works. So that's also one of the reasons for why EY is into this. So really looking forward to discuss this further with you guys.
That's perfect. Great. Then let's proceed with Lucas from Centrifuge. Please present yourself quickly.
Hello, my name's Lucas Vogelsang. I'm one of the co-founders at Centrifuge. Maybe like just a bit of a story about Centrifuge is that we, sort of our founding team was like very much in the fintech space. We built like supply chain finance solutions for like over 120 of the global 2000 companies. And so we saw what works and how like trade finance can be improved at like in some of the largest companies. And about almost 3 years ago now, we sort of started thinking, okay, what would it look like if we tried to start solving some of these problems with blockchain, and specifically in the Ethereum ecosystem, with that in mind. And back then, I think that the term DeFi didn't exist yet. You had the ideas of Maker and a few other like projects out there that sort of were thinking about to bring finance products to on-chain, but sort of over the last 2 years, this space made huge advances in sort of building novel financial products, coming up with ways that people can trade, people can sort of settle contracts and so on. And where Centrifuge is coming in all of this, and what we've been sort of working on and are launching now is a way to allow businesses to tokenize their assets and borrow against some of the assets they have, or they already have in I mean, what crypto people often call the real world. And so with like, because our belief is that, like, of course, to open up crypto to new users, we can't just have better ways to trade ETH and speculate on the price of Bitcoin and sort of come up with these crazy concepts. We need to like build ways that that businesses can sort of onboard using that, and that's sort of what we're very focused on.
Okay, thanks much. And finally, we have one of the largest Ethereum companies presenting. Min, would you like to present yourself and your company quickly?
Sure. Thank you, Philip. Hi, everyone. Thanks so much for joining. My name is Min Teo, saying hello from London. I lead venture investments on behalf of ConsenSys. You know, I'm not sure how many of you are familiar with ConsenSys, but you know, we're one of the earliest and largest blockchain companies founded by one of the co-founders of Ethereum, Joseph Lubin. And we were also one of the earlier investors in this space, you know, and we invest in blockchain projects from the infrastructure layer to the application layer, the aggregator layer, largely early stage, but you know, we also have deployed capital into some larger strategic JVs. And we also cover the whole gamut of, you know, really trying to work on the forefront of the ecosystem with founders and developers, but also we have a lot of we have a team that works on the enterprise side, you know, working with big enterprises like Microsoft, Ernst & Young, you know, to bring them along on the journey of just decentralization as well. As it relates to DeFi, you know, from my vantage point, like, and I was just chatting with Gustav about this earlier, you know, it's really like what we're seeing a lot of smart people just like, you know, come to this space. And, you know, as sort of an investor on the early stage where talent investors first and foremost. So we follow where smart people are spending their time. And I think the power of DeFi really comes into fundamentally the ability to represent value on an ERC20 token is something that's pretty cool and pretty composable, and really creates a whole new category of like permissionless and accessible financial assets for all. So very excited to be exploring this a bit more on this panel with this group of people.
That's perfect. Great. Thanks for the introduction. I think now everybody has a feeling of who is here in the call. We will also monitor this WhatsApp group and check for questions out there. So first of all, let's get started about the question about what does it mean to connect real world assets to a decentralized network. First of all, we need to explore the question, does it really make sense? Because it's very likely that you have an central intermediary where the off-chain asset is somehow connected to the Ethereum network or to the blockchain network. So this might be a new type of intermediary coming up. But let's first explore the question of what does real assets mean once you are connecting them to the DeFi ecosystem. Maybe Magnus, I think you have a nice example here. Would you like to take this question?
Yes, for sure. Thank you, Philip. And I actually have quite a few examples based upon the clients that we assist on this area, and of course, sort of, you know, the classic one that we hear about are the ones that are with a higher value, such as real estate. We've seen from Switzerland with the Curio Invest, who is looking into collectible cars, etc. So I think a key element to this is the link towards the fractional ownership. So i.e. it makes it easier for people to invest a smaller amount rather than invest in a whole hotel, for example, where we are assisting a real estate client of us called Myris, who is going to build a hotel where they have created a platform itself where they use the token economy to pay workers, to add transparency towards the investors and also the whole process of that, but also that you are able to invest in the hotel itself by a fragmented ownership. In addition, we also have another client of us called VIV, W-I-V, that is at the moment into wine, fine wine, and then they have put the asset into a bonded warehouse, so you can trust that the wine is actually the collateral as you use as a wine is stored safe and secure. And then you can buy the wine at OpenSea, for example, paying with DAI. So that's just one or a couple of examples of how we see things slowly moving into this industry. But there's also a bunch of others, and I will not take all the example, and I think I passed the word further. So Gustav and Lucas also can give some examples.
Okay, makes sense. What about Centrifuge? You are operatively doing such things from the software side. What examples do you have in mind, Lucas, or what kind of examples are you working on?
So I mentioned earlier, we're sort of focusing on what I would say, like right now, trade described generally as a class of trade finance assets. So in like this, probably many of you know, like businesses like have frequently a need for short-term liquidity that they get access to by, for example, collateralizing invoices, inventory, purchase orders, future revenue, sort of, and assets that they have. And so in this category, you see many different approaches. Like you have the very large supply chain finance programs that like large corporates are doing, where they offer just their suppliers cash. You have like the traditional factoring company that is just like going out there and going to businesses and saying, hey, like we'll buy your invoices and we'll finance you. And so sort of in that category, like we've worked on maybe what I would call like the opposite of what of the examples that you mentioned, Magnus. Instead of like going to the fractional ownership route, we're actually saying we're creating a way to very efficiently securitize these individual assets. Because if you look at an invoice, it's a quite hard thing to value, to price, and to sell. It has like it has its own credit risk. You can't just split it up. It has a weird denomination, a specific maturity date, and so for like a DeFi investor to invest in an invoice, in a single invoice, I think it's quite a hard task. And so what we actually build with sort of our technologies, a way for what we call asset originators, entities that have these assets and want to connect to investors that can lend against these assets, to create sort of mini securitization, lightweight securitization, to sort of create a portfolio of invoices on chain and allow like many different investors to invest in a share of these invoices, where now instead of having like this one particular invoice where you are 100% reliant on this supplier repaying you, to having this portfolio where like you now have some diversity. And so we actually have two projects going on right now. One is Paperchain. Paperchain is a company that analyzes music streaming revenue and gives music labels sort of insights on their sort of performance of their songs, of the songs they sell that get streamed on Spotify, on Apple Music, on Google Play, and so on. And actually now what Paperchain said is they wanted to start offering a finance product on that. And so they're like a small, you could call them fintech, that says, hey, like instead of now trying to find a bank that is interested in financing these assets, we're gonna try to tap into DeFi and bring these assets on chain and sort of use this new market to get capital. And so they're building out a finance product for these labels to offer financing to their customers, which are the music labels, allowing anyone in the DeFi ecosystem to invest in these assets and sort of get a return on the financing.
Okay, but Gustav, next question would be for you. What happens here exactly? Because once you are connecting an off-chain asset, be it like a licensing contract or being an aggregate from a supply chain finance, some kind of machine silo or something like this, if you're doing this, then you're introducing another trusted element exactly at the edge of the chain where you are starting to become off-chain, and then it's not truly decentralized anymore. So what's your perspective on this? Should this happen? Is it okay that this happens? I guess yes, but how to do it exactly software-wise to not introduce intermediaries again, which need to be trusted such that the system can operate?
Yeah, so I think like the simple answer to that one, I don't think it will be possible to introduce these assets without a trusted intermediary somewhere in the process. You know, we have seen, for example, if I'm just gonna, you know, use my fellow speakers as examples, you know, like Centrifuge, they have really created a setup where they really try to use data for like a way to be able to, like, over time, as these products mature, you'll be able to have more and more data points. So you kind of like can use that as a way to trust the assets, or like the stuff that's coming through. We've also been in talk with Viv, the wine project that Magnus he mentioned, and you know, there's some other projects that goes the route that they simply, you know, have EY sitting behind them and kind of like vouching for the assets. So I think that, you know, a lot of these frameworks here have been working very well in traditional finance for like a long time, and I don't think like everything can be innovated at this exact moment, right? So I think it will be difficult to, you know, really remove kind of like the trust completely from centralized assets, because, you know, it is a centralized asset. You know, it has often a physical location. There's often people who, you know, will tend to that physical location, kind of like make sure that nothing happens to it and so on. If it's, for example, in storage, or if it's a building, I mean, the building is there, right? So you kind of like have, there's like some elements of trust in that. In regards to the decentralization, I think that's like a more like key point of like what we're actually trying to do, because I do know that there's like a lot of people saying, well, now you introduced USDC was the recent centralized asset, which was actually the first real world asset that we introduced into the Maker protocol. And over the next couple of years, you know, over the next many years to come, you know, we will introduce many more assets. And I do truly believe that, you know, we over time can really create a decentralized network of assets. You can imagine, of course, if you have like 5 assets from the US, you know, potentially within like 2 states, which would normally be like California, New York, that doesn't feel very decentralized. But let's say you have assets from 50 or 60 different jurisdictions, all with different risk profiles and different things behind them and so on. I think that could really create kind of like these like decentralized networks of assets and, you know, achieve the decentralization that we really want. I also believe that another thing which also comes with this, which is, you know, one of the key elements in just basic investment advice, you know, what do you tell people when they come in and they want to invest for the first time? You know, you always tell them to diversify, right? And like a crypto only backed protocol in its current form just cannot be very diversified. So another thing is to really our, you know, number one priority is ensuring the stability of DAI and the Maker protocol in general. And this is something that we truly believe will come at diversification at the foundation level. And it seems like the community is kind of like following up with that belief as well. So that is really, you know, let us get as many as diverse assets from many different places around the world as possible. And then we really have, you know, the most stable system that we can possibly achieve.
Okay, interesting. And maybe, I mean, how far are we with this? How many startups are in this area? I think you must have a very good overview here. Is it like early stage? Do we see a couple of prototypes, or do we see already masses of assets waiting to somehow be connected to the DeFi network? So where is the life cycle of this, let's call it little emerging industry?
So, I mean, it is still definitely young, but I definitely also believe that there's a lot of assets. I mean, we've been in contact with a lot of asset originators over the last couple of months, because we're opening up for the collateral applications right now, so the community can take a decision in regards to what should be added to the system. And you know, I would say that I think just from Europe and Asia alone, we had more than 50 companies who all had different types of assets. Some of them were crypto assets still, but at least like 20 of them were like strong traditional world assets. And then of course, all of these companies, they're in different stages. So we have, for example, Centrifuge, which is a little bit more mature one, who has 2 applications, one with concentrate and one with the paper chain, but it's definitely moving forward. And I truly believe that, you know, within 2020, we will see several real world or like traditional world assets being added to these protocols, whether it's Maker or some other protocol. I'm pretty confident in that. Okay. If the community wants it, of course, it's still very community driven and community approved. So if the community wants it, of course.
Okay, makes sense. And Min, at ConsenSys and in your field, you know, do you also see a lot of startups moving into this direction? Oh, I think Jan Mundin, Jan, you need to unmute.
Yeah, now it works.
Now.
Right. Yeah, certainly. I think we're seeing a lot of activity in this space. You know, real world assets have been going into Ethereum for a couple of years now. On our side, we have a team called Codify, which is one of our primary business units. And they're really, you know, serving blockchain for commerce and finance, tokenizing real world assets and financial instruments such as real estate funds, corporate municipal bonds. And this has been happening since, you know, probably early 2018. I think, you know, looking at sort of the landscape, like even though the secondary markets haven't really matured as much as we'd like during that time, you're really starting to see assets get listed on Uniswap, some other DEXs, and people are really buying into it. You know, like Lucas and Gustav mentioned, a new emerging approach is that even if the secondary markets venues don't really have deep liquidity, these assets are starting to be used as collateral in permissionless lending protocols like Maker and so on. You know, recently we've really started seeing an uptick of interest in tokenizing assets to borrow against them. You know, as an example, we're working with a large bank to tokenize corporate debt. We're also tokenizing an upcoming large gold fund. And, you know, it could be an early sign that there's increased demand to move more value to permissionless blockchains in that sense. I think on the early stage side, you know, we're seeing a lot of teams really build a lot of the necessary financial infrastructure, you know, be it sort of on the Oracle side or usability, making it easier for people to sort of price and tokenize assets. And I think it's a real win for everyone and working hard in the ecosystem, and it'll just make it more robust and secure.
Okay, interesting to hear this, but let's talk about like one asset. Let's talk about the car. This has been a question now in the chat. How does this operatively work? You take the car, you somehow need to have the car, and you need to have cash flows of the car. You need to categorize and analyze. You have to categorize and analyze these cash flows. Then you have to legally put this car in some kind of jurisdiction, and then connect this legal entity or something like this to some kind of smart contract, right? Is this basically what's happening here, operatively speaking? What kind of aspects need to be considered here? What kind of contracts need to be written here? What are the best jurisdictions for this? Who wants to take this question? I think that's not an easy question, but maybe multiple people can answer here.
I can start briefly. At least I don't know Curie and West in detail, but I know at high level. And as far as I understood, what they have done is they invest in, say, collectible cars, i.e. Cars that is produced in a low number, say 100 to 1,000, and they increase by nature default in value over the years normally. So as far as I understood, they have created a trust. So the legal setup is in a trust, and the car is stored in a safe, secure, air-conditioned area and dust-free area. And when the collateral, i.e. the car, reaches a certain value, say it increases by 20%, they will sell it, and then you will get your return of investment on that, while you can trade freely the token while the car is increasing in value. So that's high level how they organize it. But it's like Gustav said, I think there's still where we are today that we need to combine the CeFi element of centralized finance into DeFi in order to move this forward, because we need a trusted party as long as we talk about physical goods and items. So it will be a mixture here, but I clearly see that we're moving in a direction towards that we can set up other types of decentralized financial instruments where you can trade your fragmented ownership into, for example, that car, and use that as a collateral or for core trading purposes. Okay. Interesting. Who else? Maybe Lucas, I think you with the existing projects could answer this question nicely. So how is this operatively done? What law framework, what legal entity, what kind of contracts do you need? Not smart contract necessarily, but also legal contracts.
Yeah, I think like one of the biggest maybe constraints we have right now actually is that a lot of, like, when dealing in real world assets, you want to denominate them in some sort of stable coin, or settle them in some sort of stable coin, right? Because tokenizing a euro denominated invoice, settling it in DAI, and then exposing every investor to the exchange risk would be quite silly, and like could potentially like eat away all of your profits. And so for that reason, like at Centrifuge, we've for now have had to mostly focus on sort of US dollar denominated assets, and therefore also sort of looked at the US for a legal framework. And our legal framework is actually like, if you explain that to a blockchain like savvy like software engineer, quite a foreign concept. But if you go to a finance person and explain them this concept, and I'll go into detail in a second, then actually this is something, oh yeah, like we know how this works, like we do this every day. And so the structure that we have is we create an SPV, a special purpose vehicle, a legal entity that buys these different invoices and puts them on their balance sheet and issues a security against, that is sort of reflects the ownership interest in this company. And so if you purchase this security, then you have a legal recourse on the assets of the SPV. And so this is how every like credit fund, debt fund, sort of token, like underwrite, like investing in consumer loans or like investing in trade finance, right? Like all of these funds, they work like that today. And so like the only difference that we've done or sort of modified this setup to is we're saying, well, actually, instead of selling shares, we're selling an ERC20 token that is the security. And so you can buy the security by just sort of signing the necessary paperwork, going through KYC and do that in a legally compliant way. But in the end, you own an ERC20 token that reflects your share. And that process legally is, I think, quite well understood. It's of course has a few sort of central points of failures that no one likes to have, right? There's of course the burden of having to operate this SPV. There's sort of the necessity to audit it. You have to go through through KYC, and sort of these things I think are just sort of the growing pains that we have, that we as an industry, I think, need to come up with better tools that we can maybe in the future, when sort of the legal system is a bit more receptive to saying you can actually sign a legally binding contract by doing some transaction on chain, and sort of innovate to that we can remove, maybe restrict the legal surface more and more, and move more of that into what happens on chain, what happens in code. And for now, we've done our best sort of to do that, to create this bulletproof legal framework, and are like now sort of looking at, okay, what jurisdictions are going to be interesting for us to like innovate, to reduce the agency of the legal setup, and to move more of that on chain. And like you see interesting things with like coming out of Liechtenstein, you see like interesting things happening all over the world. The reality is for us, like at the stage we're at right now, our focus was the US market and sort of this very simple setup that we have now. But over the long term, of course, and Gustav, I think, mentioned that in the beginning, saying that we have to also diversify this portfolio across multiple legal jurisdictions, with different kinds of legal setups, different assets, and sort of through that have like experience knowing which situation works best, which SPV structure works best, and how to do that. And ultimately, the market will price out the sort of unreliable setups and sort of hopefully push for.
That's really interesting. But I will soon come to a question which has been asked in the chat about auditing this. But before this, that I think that question could be answered by Gustav. How wouldn't it be best to have some kind of standardization going on? Let's call it an ERC standard for cars, like standardizing cars, an ERC standard standardizing machines or sensors and all kinds of other things, because otherwise you would have to audit anything individually, and then an investor would have, again, difficulties to compare it in case it's not standardized, right? What about this? Is there some kind of standardization of real assets?
Why we don't create standards for it? And I think, Philipp, that definitely also that makes a lot of sense. But I think we need the ecosystem to kind of like be a little bit more mature. Not because I kind of like want to see specific, what can you say, like projects fail, but I think right now we don't really have a like clear understanding of like what necessarily would be the best setup for everything. There's still like some questions in regards to, for example, how do you deal with like auction mechanisms and like liquidated, you know, centralized assets and stuff like that I think will need to be tested out. But I mean, I think over time, it would also be difficult to apply like a global standard, let's say, for example, because you know, in general, like global regulation, like a similar regulatory framework for specific things is very difficult to achieve, right? So I think we would see like different things coming out of different jurisdictions. And, you know, I think especially like regulatory arbitrage will play a big thing here. Like Luxembourg, for example, has been very active in pushing frameworks forward that could deal with these things. I also believe that Germany actually has made quite a bit of progress, even though that might be like a surprise to a lot of people. It's like a traditionally pretty conservative jurisdiction, but I believe that we've seen some movement here, and there's like several tokenization projects coming out of Germany and operating under you know, German law. So I think that there's like a lot of things. There's like too many moving pieces right now for like the industry to be able to come together. But I do believe that like at a point when we reach like a maturity, or like at least become more mature than we are now, that would definitely be like a way to increase the efficiency.
Interesting. So the next question is coming out of the chat. What's happening with auditing? What would you propose here? Is it like traditional auditing companies doing this? Can it be technically audited? So how would this work? Maybe Magnus, you working at Ernst & Young, that would be probably your business in the future, right?
Yes, that's apparently also why we have been one of the first movers in this area, because we clearly need to understand what's happening, because this is affecting our clients. And yes, I think if we look into not only the core DeFi case, but in tokenization by itself, by nature, by i.e. The track and trace hype that we have had in the blockchain area, we need a third or a fourth or a fifth party to be in there to verify things with sensors, etc. So that's just taking a link towards Tether, for example. When they didn't want to do an audit, it wasn't pegged one against the dollar. It was traded for 70-80 cents. So it's an element that we need to have in there, and it's all about trust by nature. You have to build some trust in the whole system to ensure that people are actually willing to use it, in the same way that, well, if you pledge your home to the bank today and you receive a loan, the bank takes for granted that you just won't let the house stand there and don't do anything with it and rotten, i.e. it's no value, but the bank doesn't check on the house each day how it looks like. In the same way, you need to do something here. So I think it's an important element as a start to build trust, and hence then you need third parties like EY, like the Big Fours, other specialized companies. So I think we will see a huge growth and demand for these kind of services to verify the physical assets, whether or not that's for supply chain purposes, for the track and trace, or for a specific asset that is used as a collateral for that kind of purpose. So that's definitely a growing need within this industry in order to make it move forward. And that's why I say it's all an element towards not going straight into the decentralized thing. We will have an element of CeFi in this, like it or not, in order to get out to the masses, I personally believe.
Okay, but it's not just auditing the smart contract, it's also the oracles, which needs to be sure. You need to ensure that, like, this physical device, say a car, is unbreakable, connected to the chain. So this would be more than just auditing. That's like IT security at its best. So who is doing this? Lucas, is this also in your domain, in your company, or would you rely here on specific IT security suppliers who are doing these high quality topics?
I don't know if, I mean, like, if you think of, I think if you look at what is being done today in the off-chain world, Magnus said the bank doesn't check on you every day if your house is still around. I think that we will get Well, so we're now talking about bringing these assets on chain where now, of course, like the value of ETH is the value of ETH, and there's always, it doesn't change. With like a car or something, of course, there's always a little bit of a risk that what you think you buy is not exactly what you buy. And that risk is something that in many places is factored in. And talking about just our traditional financial world, right? Like when you buy stocks, you could invest in something that you think is not it could be fraudulent, it could be a company that's about to go bankrupt, who knows what. The same way when you invest in 1,000 bottles of wine, I'm not advocating that we say, oh, like there doesn't need to be any verification at all, because of course when these assets do come into DeFi, you have, like, it's a lot easier to just sell it and liquidate it and like sort of do that without consequences. But I think there's still a way to do so, sort of managing this systemic risk, pricing these things in. And so I wouldn't, like, Centrifuge is providing we're providing like tools to do that. Like one of the features that we said we want to do is actually, when we're tokenizing a portfolio of loans, portfolio of invoices, for example, we don't just want to have oracles that reliably feed in pricing information on these invoices. And so that mostly is, what is the fraud score of this buyer or supplier? What is maybe what is the face value of the invoice? Is it overdue? Is it all right? Like, is the buyer still in good standing? So these topics. But then we also said that actually to create an insured or sort of more trustworthy asset, we actually used something that in the traditional financial world is quite established. We created a structured product. That means that instead of having one ERC20 token that represents let's say 1,000 invoices, where if you can invest in sort of this entire portfolio, we actually create two different tokens. We have sort of a junior, and in the traditional financial world, this is called a junior tranche and a senior tranche, where you say that some portion of the investors invest in the junior. They take all of the risk first, meaning if there are any losses occurred, they will be, the junior tranche will take the hit. And only once sort of the junior tranche has been wiped out, will you start eating into what the senior tranche has invested. So now if we have our 1,000 invoices, we say we have a 10% junior tranche, and we call this two different tokens, generally TIN and DROP. DROP is the senior and TIN is the junior. If we have, like, if this portfolio of 1,000 invoices now loses 95% in value, the DROP token holders still see their regular return with the interest that they've been promised, and the TIN token takes a hit. And so what we're doing with this is we're creating a way for these asset originators to invest in in the junior tranche. We're saying we want to have the people that bring these assets on chain have some sort of financial incentive in that, and so they generally invest in the junior tranche in the TIN token, along with other investors that either know these assets very well or just like the extreme volatility, but also the potential sort of increased profit, because as a TIN token holder, you get a higher interest rate as opposed to the DROP token holders. So with that, you can create sort of this like basic insurance that if you now have to not be sure anymore that your entire portfolio is not going to have any bad apples in there, but like sort of you have some sort of minimum insurance. And so there's things like that, different kinds of levels of protection that we can build into it, going from oracles to this structured finance approach with the two different tokens that sort of give you an insurance of default to some percentage. You can work with, I mean, the maker community, if you look at how they onboard new collateral, right? Like they pull these onboarding applications apart, like look at different risks, like have many different people look at exactly what these asset originators are doing in the instance of USDC or TUSD, sort of looking at the legal setup and sort of debating on this and as a community come together and make a decision. And so I think it's like a multi-tiered approach to that. Oracle's one important part.
Okay, and who that's one of the latest questions now. Who of you guys would basically be thinking about which drivers are now in the market? Which market participants are really driving this kind of development? Is it investors? Is it startups? Is it like institutional investors? Is it like a large-scale company such as ConsenSys, for example, driving this? So what do you see here in terms of market participants really driving this kind of tokenization efforts? Gustav, would you like to start here?
Sure. So I think that it's definitely a space that is still very startup dominated. At least if you look at like the number of participants, and I think it will be this for a while. I mean, we have also been in contact with several of like major financial institutions and so on, but I mean, I think we're still like pretty far away from seeing like DeFi and like centralized finance, like banks and so on, like really interact with each other. I think it's definitely something that will happen in the future, because I think that let's say that we take like one of Centrifuge's projects, right, and we have these like structured finance setups, which is something that banks understand very clearly. Also hedge funds I know has expressed interest in product like this coming from the blockchain space because like a new type of assets, right? I think at that point, you could have different actors in the same kind of like project coming from both worlds. But I think right now it's pretty startup driven. However, I must say that I'm very happy that for example, we have like EY on this call today. There's several of the major consultancies have done like some big moves there, which I think is something that is very important, and we can kind of like get the feedback that it might be because of demand from their clients, right? So simply because the financial institutions actually want to do some of these things, and then they go to the people who can then help them build it, and that's the consultancy. So I think that's like a positive sign. But I think there's still like also a big leap from kind of like doing pilots, as a bank or institution to like going like full blown public blockchain. We're on Ethereum ERC20 standard. So I think it's like there's kind of like all this stuff that is very visible and very noisy, which I believe is a startup scene. And then you have kind of like the stuff that, is a little bit more hidden where you don't necessarily know everything that's going on. And I think that's very institutional driven. So I'm not sure if I can give you like a very clear answer as to like who is like the main driving force, apart from us, of course, but
Okay. That's fine. Okay, who else is the driving force here? Maybe Ernst & Young. Well, you're taking money, you're not spending it, right? But who else is it? Maybe ConsenSys.
That's not quite right, Philip. We are actually spending quite a lot of money in the Ethereum landscape, actually, because we're not like your interpretation of the classic consultancy company, which is only going to build you really high hours, but more like we have invested heavily in the Ethereum era, and we believe in public blockchains. And hence we were the first mover out there who actually was able to carry out a zero knowledge proof transaction on the public mainnet of Ethereum. So in relation to that, we have also invested, among others, together with ConsenSys, but also in Microsoft, on various different platforms. I.e., now we have a framework called Baseline, which is open source out there. So we are definitely contributing to the Ethereum community in that sort of way. But I understand your question and originally thought around this. So, but back to your question, what we see is that, of course, there's, you can call it innovative startup driven, but for the last couple of years, we have, or the stakeholders out there have been allowed to work sort of without all the noise around this, because like it or not, the main driven factor in the market has been the Bitcoin price. if the price is up, the media writes about it, and all C-level people are having that on the agenda, i.e. Bitcoin is equal to blockchain, all of this stuff we all know. But now they have been allowed to work sort of a bit more on the back end, and we work together with lots of large entities who is now getting much more mature on this. And I also think that a driver in the market is the People Bank of China in general. What we see will come up there when they actually launch now, that will be a push towards the European Central Bank on the CBDC, central bank digital currency element, as you are deep into as well, Philipp. And I think we will see that will be a force that will go further on to the ordinary banks. They will look into their systems, and i.e. that will push the whole thing further. So
okay.
I say, for example, I saw a recent survey that World Economic Forum had out there, where they have asked some experts, and they believe that by 2025, 10% of all global GDP will be stored on a blockchain. And at EY, we have said officially that by 2030, we believe that half of all business contracts will be executed on a blockchain, i.e. on a smart contract. So in relation to, we all understand that we need a token element where you can transfer a sort of a payment. And that's also why we clearly see that this will grow from lots of different angles. Stakeholders out there.
Okay, what about ConsenSys? Is ConsenSys also really driving this in terms of, you know, investing in startups, investing in joint ventures and so on? Are you driving this kind of tokenization of assets operatively? I think that's also one of the last questions for today, unfortunately, because we are already a little bit over time now.
Absolutely. So, you know, on the startup side, we've made a whole bunch of bets on, you know, sort of DeFi startups, centralized finance startups, you know, on tokenization, lending, all sorts of different applications. You know, on our enterprise side, you know, unfortunately, we can't really name our clients, but have a lot of JVs with loads of enterprises and, you know, any sort of institutions or individuals looking to sort of tokenize assets. You know, really like kind of what Lucas and Gustav said, like resonates in the sense that like, it's not just so much a supply and demand question. It's just like, you know, a matter of like, is there utility in doing so? And the beauty of smart contracts is really being able to isolate state changes. So it's very clear, like in any sort of process, whether you're trusting individual or machine. So, you know, if you look at gold, for example, that's in hot demand these days with like, you know, the financial system sort of showing signs of vulnerability, everyone wants to hold gold. Like you're not really going to hold gold bars. So how do you hold gold? You can hold gold with like an ETF, but even now with like, you know, the travel industry, these ETFs are also doing some sort of fractional lending because, you know, they can't actually transport gold bars for settlement. So thinking about tokenization as being part of a new global settlement layer that's instantaneous and digital, I think that's something that's very powerful and really applies to a whole bunch of real world assets. And the applications are something that many different market participants can benefit from, you know, financial system and otherwise. You know, ConsenSys has always been very passionate about adoption. Ultimately, like, you know, we can't sort of, innovation cannot be bounded by the size of the current community. We can't move at the pace of decentralization. So we're constantly looking to bring on new market participants, you know, be them institutions, startups, tech companies, you know, high net worth individuals. I think it's very robust, and that's in some sense the, you know, the beauty and versatility of Ethereum.
Okay, interesting. I think that's very nice to hear that all these projects are getting better and better. Tokenization is the future. Now we're getting operatively done. It's much more than Bitcoin, but I liked Magnus' insight that Bitcoin is also driving this from a sentiment perspective, not like with cash, but with sentiment. And I think it was a very nice discussion. Hand back over to Jan, and actually that was very insightful. I didn't know that this tokenization of real assets ecosystem has developed so far already. So I would propose to continue this discussion, say in a couple of weeks again, if you wish, to see what's happening then with more power in a couple of months with more projects. Thanks to all.
All right. Yeah, thanks a lot also from my side. I hope you can see my slides now, right? Yeah, interesting discussion, as Philipp said. Hopefully we can reiterate on that in a few months when hopefully a lot of things have changed positively. From our side at Disrupt, I want to give you a quick overview on our future events. So today we had a little panel discussion. On the 15th, we will have a pitch event. So there's going to be 5 blockchain infrastructure companies presenting themselves. So if you're interested in that topic, do sign up for it. You'll get a lot of information in a short amount of time. Then also we're trying a new format in the sense of mentoring or coaching. So for all women interested in joining the blockchain space, so you're not quite working in it yet, but interested in it, we'll have a workshop session with a few attendees with Sina Maya next week as well. And then lastly, we have another pitch event with BlockRocket startups coming up. You'll also receive emails from this. You'll find us on LinkedIn, and I hope to see many of you at our next events. Thanks a lot.